Well, dear students, it's time to discuss cash management, which means dealing with banks or hopefully credit unions. And I guess the best that could be said about this is this topic is at least not as painful as taxes, the previous chapter. But folks, how do you know a bank is making money? Their doors are open. Look at this. Overdraft fees average around $35 per transaction, and in 2021, that was approximately $33.5 billion. Now, credit unions are far less painful when it comes to overdraft fees, but they can still hit you too. On slide number 2, we take a look at the types of financial institutions. There are commercial banks, which are for-profit entities insured by the Federal Deposit Insurance Corporation. And then there are nonprofit credit unions, which are insured by the National Credit Union Association. Now, both of these organizations are sponsored by the federal government, which means that, yes, your money is safe, up to $250,000 per account. That's why it's called the Federal Deposit Insurance Corporation. But once you leave the confines of a commercial bank or a credit union, now you're in non-deposit type financial institutions, which are uninsured. We'll discuss money market mutual funds later in the semester. They're kind of like a checking account, but even though they're not explicitly insured, they're pretty darn close. In fact, whenever there's a problem in the money market world, the feds come to the rescue in one form or another. The industry closes ranks and makes sure that the offending institution gets propped up and then properly thwacked for their stupidity. Now, many people tell me they use post office or convenience store money orders. We hope that you'll learn that banks are, maybe not your friends, but they're very useful institutions. I'm a big fan of credit unions. Where you really want to stay away from is the netherworld, check cashing outlets that charge you 1% to 3% of the check or more. A bank or credit union, once you've established an account, will cash your checks for free. Pawn shops, 60% interest, loan until payday companies, 250, 400% interest per annum on an annualized basis. Where do you see these places, folks? Do you see loan until payday stores in La Jolla and Rancho Santa Fe? No. You see them in San Isidro and National City and places where they prey upon the unbanked. So if you have any friends or family members who are still using these services, get them to take Business 121 Principles of Money Management, or let them watch this presentation, or just work with them to become banked. I know in Mexico the culture still is very anti-bank with good reason. The banks didn't always treat the customers that well. They've gotten better, but still, in my humble opinion, they have a long way to go. If you ever go to the banks in Mexico, the lines are outrageous. I don't know why the Mexicans put up with it, but I guess when you look around, you see all the other banks are basically the same. So we don't want you to be we don't want the predators, the pawn shops, the loan until payday companies, to take advantage of you and your loved ones and friends and family members. Slide number 3. What are the types of accounts? Well, savings accounts, sometimes called passbook savings accounts, share accounts at a credit union, they don't really call them share. That's what they are legally, a share account, but they call them savings accounts. And certificates of deposits, which are fancy savings accounts that you need to keep the money in on a certain period of time, are places to store money for the short term, 6 months, a year or so. Why? Because it won't go down and it's federally insured. Once, as we'll discuss later on in the semester, we get to a point where the money is not needed for 5 or more years, long term, then you don't want to keep it in a bank. Relax, we'll get to this later on in the semester. Now, what about your payment accounts, your checking accounts? At the credit union, they don't call it a share draft account, although that's what it legally is. They call it a checking account. This is going to be your day-to-day transaction account. Now, many of the younger folks don't even want checks. I mean, I still use them for certain situations, but should you have overdraft protection? Well, be careful. Be careful. It used to be, and the banks still want to do this, that you would go to Jimba Jamba Jumba Juice and buy 800 calories of sugar and swipe your debit card. And if you did not have enough money, they would, we don't want you to experience the embarrassment of having your checking card declined. We'll allow the transaction to go through and charge you $35 for the $35 for the overdraft fee, along with the cost of the 800 calories of sugar. So now you must opt in, and of course banks want you to opt in. Credit unions typically will have a provision where if you go over, under, I should say, if you overdraft your payment account, they'll link it to your savings account. And I think Mission Federal charges you $2 if that happens, as opposed to $35. And I think Navy Federal doesn't charge you anything, which is pretty darn cool. Navy Federal Credit Union, which is only available to members of the armed forces. So do think about that, because those overdraft fees, as we said, are making the banks very, very wealthy. Now, what about other accounts? We talked about money market mutual funds, but there are money market accounts at banks and credit unions, and they look very similar. They're just fancy checking accounts. At the bank or credit union, they're insured. At the mutual fund company, they're not insured, but again, they might as well be. Some people will have a trust account, and there's reasons for having a trust account that we could talk about way later in the semester. Somebody is not capable of handling their own money, or maybe there's estate planning reasons for having a trust. This is the world of the lawyers, and we are not allowed, nor do we want to give any kind of legal advice. A trust account may be for you, usually not. Asset management accounts are these fancy accounts at the brokerage firms and other places that give you this, special card and have all kinds of perks when you go traveling, and maybe charge you a couple $100 a year for the privilege. And then, thankfully, you don't see these things too much anymore. Club accounts, vacation club, Christmas club accounts. This was a way for the banks to tell the women, the little homemakers, how stupid they were. Put your money with us every week and we'll save it up for Christmas or for a vacation. We won't pay you any interest, but we'll give you a toaster, and that will make it all worthwhile. Yeah, they were real popular in the 1950s and 60s, and they disappeared, and then they brought them back about 20 years ago, but thankfully you don't see too much of them anymore. Now, this is something that you may be familiar with, you may not. It's called tanda or kundina in Mexico, and in the Philippines it's called baluwagan. And when I first heard this, I was from a from somebody who grew up in Mexico and was living here. I just was astounded. I just thought, what? What is? Um, yeah, a group of people get together. Usually somebody runs it, is in charge. And maybe there's 10 people. Let's make it simple. They all want to save $1,000. So the 10 people get together and they all put in $100 a month for the next 10 months, $1,000. Now, they pull numbers out of a hat, or usually the person running it is number one. And the first person gets the $1,000 that month. The second person gets the $1,000 the second month. See what's going on here? It's a closed system where there's no interest involved, but there is risk, because what if the first person takes the money and then says, that's what I thought. We come from Philadelphia, my friends and family, we in Philadelphia, we know the difference between a friend and a good friend. Do you know the difference between a friend and a good friend? Well, let me tell you. A friend will help you move. A good friend will help you move a body. So I thought, why would you do this? And I said to her, what happens if somebody just decides that they get their money, their second or third or whatever, and they decide they're not going to pay into it anymore? And she looked at me as if I had just said, what happens if somebody eats babies or something like that? She just was horrified. And I thought, oh, right. It's the culture. The culture is much stronger, family-oriented, friend-oriented. And whereas our culture, I'd take the money and say, I taught you a good lesson. Don't trust nobody. So you have to decide whether you want to get involved in Tanda, Kundina, or Palawagan. By the way, it's not legal. It's not a pyramid scheme. It's not a Ponzi scheme. It's just unregulated, certainly, amongst friends. And I wouldn't want to be involved with it. But then again, everybody's different. It's why there's chocolate and vanilla, and some people like strawberry. Now, how about the payment methods? Well, checking accounts now are de rigueur free for the most part if you enroll in electronic statements, if you want your paper statement, which nobody gets anymore. They're going to charge you every month. Certified and cashier's checks you don't see too much anymore, mostly I guess because of electronic transfers. A certified check is your check that the bank or credit union has said, we guarantee that there'll be money in the account. So you go to the bank or credit union, you say, I want to certify this check for $400, and they make sure that your account doesn't go below $400 until that check clears. A cashier's check is a check that's based on the bank or credit union. It's not comes from your account, it comes from their account. So vendors such as car dealerships, where a lot of money is at stake, will trust these. Although there had been a rash in the 1990s of phony cashier's checks. So they became less and less popular, and now everybody wants to do electronically. Money orders and traveler's checks are considered far more safer than personal checks, but again, with electronic transfers, they're just not as popular anymore. Why are they not as popular? Because of electronic debit cards, credit cards, gift cards, smart cards, and now services such as PayPal and Venmo and Zelle and Apple Pay and Google Pay and Android Pay and Samsung Pay and Walmart Pay. Why do these companies want to get involved with the payment system? Well, as we said, how do you know a bank is making money? Their doors are open. So Apple and Google and Android it's Android and Google are basically the same thing. Samsung and Walmart, they all want to become banks. They've got tons of cash. They want to become a bank. And the regulators say, no, you can't be a bank. And Zelle is actually run by the banks. It's my understanding. I don't know enough about it, but you are using the banking system when you use Zelle. Whereas Venmo and PayPal are their own systems. I do not like Venmo. I do not like, somebody sent me money in Venmo, And first I had to, I don't want another app on my cell phone, but I had to do it. And then I got it working. And I said, okay, give me my money. And they said, oh, yeah, we'll give it to you in 3 days. What? Whoa. No, Venmo is not a bank, folks. If they go under or something happens, yeah, so I said, I don't want to deal with Venmo. But that's your decision. Whereas Zelle, you get your money immediately. Careful, there's a lot of scams going on with Zelle, and PayPal is its own system. People tell me they love it. I don't want anything to do with it. They charge the seller, right? They charge the person who's receiving the money, not the person who's sending the money. And then, of course, there are cryptocurrencies. Cryptocurrencies. Yes, well, we'll discuss these later on when we get to investments, but I'm not a big fan, folks. And if you want to learn more about cryptocurrencies, contact me or go to the BUS121 Introduction to Investments class website, and check out the chapter on cryptocurrencies, because it's pure speculation. It's the greater fool theory. Somebody out there is a greater fool than I am and will buy this useless electronic piece of information for more than I paid for it. Okay, and that creates all kinds of controversy because people think that dollars and fiat currencies, as they pejoratively call them, are worthless. No, not so fast. And we don't want to get into economics 101, but no, our dollars are not worthless. Cryptocurrencies are basically worthless, and they're only worth what somebody else will pay for them. Whereas dollars, no. Let's not get involved. No. I promise I won't get involved. Look, dollars are based on our economy. They're based on our ability to produce and consume the goods and services that our economy creates. And so when people say that dollars are worthless, I say go into a grocery store and look around. You tell me that their dollars are worthless, right? But they'll eventually accept Bitcoin, yeah, until it becomes basically worthless because there's nothing behind it except an algorithm that says this is what they're worth. And we've seen it with many of the cryptocurrencies. Some of them will survive, I have no doubt. The larger ones will survive, but there are some 6,000 of the darn things, and most of them are just garbage. And then there's no regulation, so your money can just disappear overnight and, oh well, sorry. And that happens all the time with hackers and people who start up a kleptocurrency just for the sheer goal of stealing everything they can get from people who foolishly join them. Okay, enough. Slide number 5. ATM. What does ATM stand for? Always taking money. Automated teller machines allows customers to conduct banking transactions using their debit cards or cash cards. Is your PIN safe? There's a whole couple of articles on the class website in Canvas, and of course, just type it into any search engine about creating a good, strong PIN. Don't use 1, 2, 3, 4, or 4, 4, 4, 4, whatever. ATMs are not free. They unless you use your own bank. I like the credit unions. Credit unions all belong, pretty much all 99% of them, belong to a group called the co-op system. And anywhere there's a credit union or a 7-Eleven, I don't know how they worked that one out, but they did. In the United States, you can get your money for free. So I like that. And then there are some banks that say, we will refund any ATM fees that you are charged. One of them was Banner Bank, which is now, it's based in Seattle, but it's now they have branches here in San Diego. and another is Schwab. I have a hard time believing this, but somebody's confirmed it, and I've gone on their website and I've tried to find where the gotchas are. Schwab has a bank. It's not the same company as the brokerage company, Charles Schwab. It's Schwab Bank, and they say that no matter where you are in the world, we will refund your ATM fees. Now, you go down to Mexico, and some of the ATM fees are fairly reasonable, a couple bucks. Some of them are $4 or $5. Some of them are $8 or $9. So I don't know how Schwab is getting away with this, because it must be a huge cash drain on them. But they are, so check it out. I might even open up an account. Okay, now slide number 6, savings plans. Well, with savings rates basically zero for many years, they're starting to tick upward. This wasn't really that important because you didn't go to your bank for any kind of return on your investment, return on your money. But the annual percentage yield, APY, we'll get to the annual percentage rate in the next chapter, APR, is a federally mandated piece of information about every savings account that turns any kind of interest rate on a apples to apples basis. So that if we compare rates between banks and credit unions, and one says they're paying you 3%, the other one says they're paying you 4%, you know that the 4% really is more than the 3%, not some kind of little sneaky little formula that they devised to make it look like they're paying you more. But even if you're getting 4% at a bank, which is still pretty hard to find, you're not really getting 4%. Why is that? Taxes. Remember the marginal tax rate that I tried to get you to make sure you understood in chapter 3 and told you that it's going to come back. It's not going to go away. We need to understand that. The next dollar is taxed at our marginal tax rate. So any money that we put in a savings account is basically charged at our marginal tax rate. So if we're in the 25% tax bracket, that's 1 minus 25% times the rate. You see, before it was in the bottom, now it's on the top. So 1 minus 25% is 75%, or 0.75, times the 4%. And even if you're earning 4% on a savings account, after you pay the taxes on the interest you earned, you're actually earning only 3%. Uncle Sam and Uncle Cal are your partners in this journey. Now, check reconciliation. More than half Americans do not reconcile their checkbook balances. This is something that's actually very sad, dear students, because it means if you don't reconcile your checkbook balance, your payment account, whatever, if you don't, I don't even use checks, doesn't matter, whatever, your payment account balance. If you don't reconcile, what you're basically saying to the bank or credit union is, hey, you guys decide how much money is in my account. Huh? How's that for a deal? Now, banks and credit unions have far fewer incidents of errors than they did in the past, and they were pretty good in the past, and now they're even better, but still, they do make mistakes from time to time. So you want to reconcile your checkbook balance, and it's not that hard normally until there's a 35-cent error and you can't find out, oh my goodness, I forgot that they charged me 35 cents for that one ATM machine, whatever. Now, we're going to do it together. We're going to do it manually and then show you a couple of spreadsheets to make life a lot easier. Write everything down. I know I'm old, what can I say? But I still write all the transactions down manually because computers screw up. I back up my machine, I back up my computer, but still, I like to have a written history. The bank statement, nobody gets their bank statements anymore. Just go online and look at it. The reconciliation forms, we have one. There are thousands, I'm sure. Spreadsheets, we have two. There are thousands for you to download. And then there are companies like Quicken and Mint, and I think they're the same company, and other companies that will do it for you for free, or maybe not for free, but some of them are for free. And why would they do that? They're just like the banks. They want to know everything about you, your financial history, your financial profile, and then they can better sell you things. If you're not paying, if you don't know what the product is, you are the product. So in the face-to-face class now, we would go through the process of reconciling our account with the bank's account. Obviously, we're not in a face-to-face class, so you're going to check out that presentation on your own. But it's actually relatively straightforward. You record the checks and payments. I should add the word payments here. Record the cleared checks and payments and identify ones that have not cleared. They're called outstanding. You then do the same thing for deposits. Now, wouldn't it be nice if they used the same terminology the banks and credit unions? No, they call the deposits that have cleared, they don't call them cleared deposits, they call them confirmed, because they have confirmed that you have put the money in their institution. And then deposits that are outstanding, they don't use the word outstanding, they use the term in transit. They're on their way. And then here's the tricky part. Look for transactions that you missed, that you left out of your check register. And then once you've done that, reconcile. Find that your accounting matches the accounting of the bank or credit union. Cool? So you're going to have one where we do it together. Practice problem one, do it once, do it twice, hide the answer. Go through the presentation. Practice problem two, which is basically the same, and then the assignment, which is the same, and there might be something on the exam very similar to it. So you can do it. I know some people just look at the numbers and they just, I got a good idea of what's going on. Don't do that. Don't do that. Don't do that. Do banks make mistakes? Yes, it's very rare, but it happens. And you need to keep them on their toes. So thank you very much for your excellent effort and attention, and get to work on those check reconciliation problems.